Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves what happened today, and what does it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. You can catch it there. You can subscribe to it if you want. Get notified of any updates. It's a nice, convenient way of doing things because you can view it anywhere, any device, mobile, laptop, desktop, whatever you want. As far as these markets and as far as what happened today, let's take a look at the numbers here. I saw the Russell. They've got it up 2.16. If you remember last night, it was wrong. It was supposed to be up a 1.16, and today it was up 1%. So I guess they just added them together. So anyway, Russell was up 1% today. The lead dog again, up about 0.25% most places. S&P tacked on a 0.38. S&P tested the tops. Dow Jones went over the tops, made new highs, and held them. Composites coming up to test the takeaway bar, as is the NDX, and the Russell got a nice pop. So when you look at the indexes, it looks pretty good. If you look elsewhere, gold, nice spike up again, a 1%er today. Silver didn't do anything. Bonds ended up reversing and trading higher. The dollar still moving higher. So, across the board here, not a lot has changed. Equities want to go up. Dollar wants to go up. Bonds still trying to go back up. And everybody kind of just saying, oh, what the heck's happening, right? Because there just is no pullback, folks. We got a 2-day pullback, first one in 6 weeks, and then we immediately do a quick V-shape off of a small pullback, back right up to the highs. Let's pop in here and take a look at the actual indexes, see what they look like. So S&P, and then of course use that to try to decide what's going to happen tomorrow. So S&P's goes up. Remember last week's high it was a low volume high. We go right back up. We test it. We test it with more volume. We get over it, back under it. That's a quote-unquote test failure, but you had higher volume. Now note we had a takeaway bar yesterday, and I did note this on the I think it was the Russell I talked about. I missed it here. I told subscribers about it this morning. We had actually a takeaway bar here. In other words, we come down, bears are in control, and the very next bar, it's a reversal that takes away all of the previous bar. Those kind of reversals, I call them takeaway bars, and it can be a reversal, from up to down or down to up. And I'm going to spend some time towards the end of the show here to talk more about it and what it means. But essentially, you got a reversal, you come back up, you're up here testing the highs. If we go over to the Dow, right? Dow makes, remember it failed yesterday, and I said it wasn't a huge deal because you never put a swing point. It always means more to me when it's a swing point than when it's just a high. And this was just a high because we came back within 6 bars to test it. Well, today, what does it do? It gets over it, closes over it, says it can go higher. NASDAQ. NASDAQ has pushed back up to the top of the bar. So the top was 40, this is the breakdown bar, 4782.07. We got up to 4781.37, so we closed just inside the bar. We still haven't tested it. Looks to be it's going to test it pronto, maybe tomorrow. NDX doing the same thing, another inside day, still working back to the highs. And that takeaway bar I showed you on the Russell yesterday leads to more extension to the upside. This looks like it wants to go try to test the tops again. And if you remember now, the Russell on a weekly has been testing up here this swing point high week after week after week. It's the 5th week it's trying. We'll see if it gets over it because we got Draghi tomorrow. We got the employment numbers on Friday. And, this is news flow now, and it's set up from an index perspective to actually go and try to pop the top and actually move higher. So we got a 2-day pullback, and now we're pressing back the other way, which in this market is, I guess, par for the course, because that's what happens. If we quickly look at some of these sectors, IBB stretches up, makes new highs. The IYT, remember, had that big spike blow off. This little area right here is going to be tough to get back over. I suspect that's where the test is going to be. That's probably going to happen tomorrow. Or, well, I don't know if it'll happen tomorrow, because, see, the thing tomorrow is this market can gap up or down depending on what Draghi does before we open. So, you know, whether we test it tomorrow or not, whenever we test it, that's the area. The SOX push higher, extends, pressing on up, 2 new highs, another ABCD structure in place here. Now this one has had multiple ABCD structures form on the way up. It's got an extension to about, looks like about there. The latest push is from this bar, and if you take that one and extend it, you can see it's going to go a lot farther. So SOX looks to go even higher. This is a big piece of the NDX, and with the large cap stocks in the NDX, in particular Apple, Microsoft, Google, really taking a break right now, it's the groups of stocks in that sector that's driving it, or that index that's driving it. And one of those groups, of course, an important one, is the SOX. So let's look at the rest of them here. XLB, that's kind of a push up, but nothing special. XLE actually looked like it test failed today. This came up to the first resistance. So you come back to the top of the breakdown bar, the gap area, test into resistance, and then you pull back. Now that low it was trying to get back into, 82.94, it didn't quite get there. It may test a little bit higher tomorrow, but this one looks like it's going to try to pull back here pretty soon. So the big bounce has already occurred. And you know, when you think about it, it doesn't look like much of a bounce, but folks, that's 5% in 2 days. And on a sector, that's a pretty big move, especially energy. So, but you know, it fell, 15 and 3. So, big bounce is what you would expect. XLF, new highs, pushing up. Big sector, big strong sector, pushing up new highs. XLI going back up to test the highs. XLK can't move. XLP actually came down a little bit today. So it's consolidating. XLU is consolidating. XLY, XLV, the healthcare, just extends, just like biotech, and XLY is actually pushing back up towards those highs again. So, when I look at the sectors, they echo what we've said all along is, yeah, you get one or two that's struggling, but for the most part, they just keep grinding, folks. They just keep grinding. There's nothing to stop this stuff. And if you go back and look, I had a article, I'm looking for it here. Yeah, right here, Meantime Statistics. If you haven't read this, take a read. I mean, this was written on 11th of November. Almost a month ago, and I said back then we got a green light till the end of the year, and that still is in effect. I mean, the XLY I just pushed up 45, 41. This thing can extend till the end of the year. They all can. They're not even overbought yet. I'm still getting signals galore on my trading signals, right? And that's a result of things not being too extended. And so, when you're looking at these markets, man, they sure look like they're, pressed to the upside here. That looks like a long way, but if you think about the way this has traveled, and you take and run the line through it, that's not a bad angle right now. That's about 45 degrees. That's sustainable. I mean, you can run at 45. You can't run this one, right? Those tend to get brought back down, and that's what happened. But that's a fairly sustainable rate of decline at this point. And if you remember, we talked about, I'm going to go back to the S&P 500. If you remember, we talked about, this rate of of ascent here was totally unsustainable, right? But now look at it. Now where are you? Much more sustainable. And if it goes sideways a little bit longer, it's definitely going to be, right? So, you know, it's changed its path, you know, from this unsustainable angle and is to something that's more reasonable now. And so, yeah, this consolidation here has allowed this angle to flatten out to something much more sustainable. And when you look at the MTTFs, and I'll bring this one over now, you know, 45 just turned bullish on, you know, not too long ago on the intermediate term time frame. So, you know, it's not as if this thing has to turn around now. And even when it gets overextended on the short-term time frame, you know, let's say it gets up to 70–80%, you know, then it can pull back and you still got an intermediate term that can take you higher until July of next year. So it's not like, you know, it's not like we're at the end. Yeah, it could be, but it's just, you know, it doesn't have to be, I guess is what I'm saying when you look at the MTTFs. Popping over to the world markets, I'm not going to go through those, but they were pretty much exactly as yesterday. The only thing different today is we saw a nice big bounce back up in China, but outside of that, oh, in Taipei, of course, with the chips. But outside of that, nothing really happening. Nothing different, I should say, happening. Go over to the ox markets. This is where everything is, folks. It's all about the dollar right now, and the dollar just keeps climbing, and that makes for a nice push for now. It's going to create problems if this becomes an unsustainable ascent just like it was before. So if we go back to, and I'll actually pull over the weekly. If we go back and look at this weekly and we think about this angle of ascent, right, this is pretty unsustainable. Right now it's something still unsustainable but not as bad. But now you're starting to take off again in another unsustainable type angle. If this does that, it's going to create havoc, right? And not only is it unsustainable, it's creating various, you know, pressure points around the world because the dollar's everywhere, and it's tied into so many trades. Fast currency moves usually lead to volatility, and this is the fast currency move if you're looking at the dollar. But if you pull this over and you start looking at some of these others, like let me pop them up here and just like let's just glance at some of these. We'll start with Japan. I mean, we all know that Japan's, you know, on a fast road to nowhere. Here's the weeklies on these. You know, does that look sustainable? I don't know if it's sustainable, but I know, you know, the reason the Japan market keeps going up is because this keeps flying down. If I look at the euro broke today. This is more evidence that Draghi probably is going to do something tomorrow. In other words, the market, the players are discounting the euro. They're trying to break it down, and if I pull over the monthly here, it looks to me like the target are these lows. 119.73 and the low is 118.79. We're not that far now. 121. If we start breaking these, folks, par is where it wants to go. And currency moves, once they get going, they tend to go. They tend to keep going for a while. So you got the break here. You know, if that break continues tomorrow, if it starts to extend, then you have to expect this move is going to continue. If it does, it's 50% of the UUP, which is going to drive the dollar higher. Currency moves, again, will cause volatility. Doesn't happen immediately, but what will happen is, you know, the traders will wait, and, you know, the big money has to unwind because the leverages are huge. And if that leverage starts to go against you, you have to unwind it. And that doesn't happen immediately, right? They cross their fingers first, but if it keeps going and it keeps going fast, that's when things have to start shifting, and that's when all the volatility comes in. So, you know, just be aware, It's a background issue. It's still out there. It's something I keep talking about, and it's gonna rear its ugly head here if we keep going at this rate. So that is a big piece of it. The commodities we've talked about, they're all at new lows. The bonds, even though they've pushed down and came back into here, they came back in today to do a retest regen, actually yesterday, off this prior swing point high it broke. Test, flips around, reverses. This looks like it wants to go higher tomorrow as well. So we got bonds, currencies, indexes, all look like they want to try to go higher tomorrow. I want to pop back over. So what's the synopsis? The trader instinct in me today, and I tell subscribers this today, is that this market looks to me, not looks, but it feels to me that Draghi's not going to deliver, and we're going to get a pushback down as a result. In other words, FXE goes up, equities get hit. But I'm not betting on that. And the reason I'm not betting on it is because everything technically is telling me it wants to go higher. So the trader instinct is saying one thing, but I don't trade off my gut all that often. I usually trade off the charts, and right now these charts look to me that they want to go higher, not lower. So, if you got to place a bet, typically you want to place it with the probabilities, and right now the probabilities look higher, or the probabilities are higher for the market working higher, not lower. So that's what that looks like. So okay, so let's pop back over and hit that kind of highlight reel that I want to talk about tonight, and that is his takeaway bars. First of all, I don't have anything on the site right now. There's some scattered information about them, and it wasn't in my books. It was something that has kind of come after that. It's just something I noticed. I've done a little bit of research on. And what I've seen is that when you have takeaway bars, they tend to have some characteristics that are unique to them. So let me first direct members, to the video library. I don't have anything in here on this right now, but I went ahead and added an entry today for it, given the question. And put a little description here. And so once I record this, there'll be a link, and you can look at it, just as you do the others that have links. So, I've kind of gotten away from updating this for a while, so I've got to get back and start recording all of the rest of these for you. And I'll make that one, since that one's asked for, I'll make it. And there was one other one asked for recently. I'll make those kind of a priority and do those. So that's where the information will be once we get it up here. As far as what they are, let's just briefly go over it here today, and let's see if we can find some takeaway bars. So actually I see two on this screen, so let's talk about them. So what is a takeaway bar? I'm going to highlight the two that are here. There's one here and there's one there. Okay, so what is a takeaway? A takeaway bar is when one bar does one thing and the very adjacent and next bar does the exact opposite. And if that bar is a wide bar, it tends to have more effect than if it's a small bar. And you can actually see that here in the two examples that happen to be on this chart. And what I mean by it is, if we take and look at the numbers here, as a matter of fact, let's just grab it so we can see them. So the high on this bar was 1970, the low 1925. This is the S&P. So that's a 55-point range on the S&P. That's not a small number. The very next bar is just as wide. And then when it extends, because it took it away, when it extends in this case about half of that, right? So the extension on the very next bar was about half of that one. Let's look at this one now. So this one was 2049 was the low, high, so it's about a 15-pointer. And then the bar that extends after it is, let me get this close, 66, about 10 points. So you got almost, about 60% of the size. In the other case, you got about 50% of the size. Okay, so now let's talk about exactly what it is. If you have the very next adjacent bar that reverses whatever was on the bar before it, and, or well, not and, but what that's telling you is that all the goodness or badness that took place on the bar prior, in this case October 8th, was reversed on the very next day and was taken away, right? And that's why I just call them takeaway bars, because they take away everything that happened the day before. And when you have a nice big wide open day like that, the very next bar takes it away, you have to expect that it's going to extend in the direction of the takeaway. So in this case, it took it away to the downside. It was a bearish takeaway. You can expect it's going to extend to the downside, and that's what happened. Now, fast forwarding to yesterday. Small bar to the downside, dark candle, right? Flips around, takes it all away, and extends the day after. Now, this sort of extension that you see here is the typical case, so one would expect that this is going to try and extend to the upside. So you're going to try to see some extension to the upside off that takeaway. If you think about what's going on, is like, let's take both examples because they're the opposites. The bulls were in control on this day, right? The trend was trying to come down, right? Was working lower, and then all of a sudden the bulls show up, flip it around, and it looks like they're going to run it higher. But then the very next bar, right? That's brought to an abrupt halt for whatever reason. The bears take control, and the continuation of that trend that was in place, right, really gets going. That's a takeaway bar. That's the kind of thing that can happen. Now, if you flip to the one that just happened, what's the trend here? Well, the trend is up. The bears get control. Oh, but no, they really didn't. And now they take it away, and you would expect that to try to extend back the other way as a result of it. And so a takeaway bar essentially takes all of that momentum, many times being that momentum in the opposite direction. In other words, your trend was going this way, and they flip it around and try to head back, only to get it taken away, and that's when you get an acceleration of that trend. Here, the trend is up. They try to break it down, flip it around, go back the other way. And so whoever's on the wrong side of that takeaway bar, that second bar, reverses it and extends in the direction usually of the trend and the takeaway bar. And these takeaway bars occur opposite of the trend usually, right? Otherwise, they usually don't give you much. And so if my trend is this way, and then we get a spike the other way, and then it takes that bar away on the very next one, then you get the extension. And vice versa over here, trend is that way, you spike down, you take it away the next bar, you should see the extension. And that's essentially takeaway bars. So I guess that's a pretty good wrap of them. Okay, so tomorrow it's gonna be wild in the morning, most likely. I suspect that you're gonna get a big pop up or down. I don't know if it'll be a big pop, but I suspect you'll get a gap up or down off Draghi, and these markets will spike it one way or the other. Now, the expectations of what should happen are pretty simple. If you get Draghi saying something about QE that's authoritative, in other words, we are going to do it, then I suspect you would see a spike up in equities and a spike down in the euro. If that does not happen, in other words, if he does say that and you don't get that reaction, then something else is really happening, and you got to pay attention to that. So the premise is if he says that, or if he does it, if he actually rolls it out, you have to expect the equities are going to fly higher and the euro is going to tank. If they don't, then something else is going on bigger than we expect. And that's why I always try to put it in the context of what it should happen, right? You hear me talk about that all the time, what should happen. Just like tomorrow, this market's set up, it should go higher. And we'll see if it does or not. But certainly you can look at that in terms of a news event too. It should spike higher if he does QE or says he will in an authoritative way. And vice versa. If it's the opposite, you would expect the opposite. We'll see what it is and how the market reacts, because the reaction is always what you care about. That's where you can measure in terms of a premise versus the reality. In terms of the charts, you know, we always are measuring what the technicals tell us should happen, and does it or does it not. Folks, have a great night. You tell a friend, tell two. I'm LA, this is and it was your daily NeoTA wrap. We'll be back tomorrow night. We'll see what Draghi does and how these markets react. And then that will set us up for the employment number on the next day. Have a great one. Take care. Good night.